In this episode, we're going to discuss 2 ways to crowdfund your future and the future of your family. Crowdfunding seems like a modern idea. However, the origin of crowdfunding dates back centuries. Some historians contend that crowdfunding-like practices date back to the 13th century. Groups of private citizens would pool their funds to sponsor risky shipping ventures in order to get notable returns. Authors have for centuries funded their works through subscription models, where the book would be published if enough readers showed interest, and war bonds are not far from the concept of crowdfunding. Some even contend that raising money to assemble the Statue of Liberty as an example of crowdfunding. According to the AI-generated response from a Google search, crowdfunding as a modern practice began in 1997 when the British rock band Marillion successfully raised funds for their reunion tour through online donations from their fans. This marked the first successful instance of crowdfunding using the internet. Today, platforms such as Kickstarter and GoFundMe are very mainstream. And GoFundMe has become a popular way to cover unexpected medical expenses or financial hardship after the death of a breadwinner. Surely you've seen it somewhere in your social feed. Joe was in a terrible car accident on Tuesday. He had no life insurance and his 3 children need help. Please contribute here. It's terribly sad, and it's common. A search on the GoFundMe platform for funeral-related fundraisers in the past 12 months in Omaha, Nebraska, resulted in nearly 500 such campaigns alone. There was an article recently published on GoFundMe titled, "A Guide on How to Ask for Donations for Funeral Expenses." When tragedy strikes, many take to crowdfunding platforms to request and provide financial assistance. Make no mistake, those donations are a blessing and a powerful act of generosity. But when it comes to paying for funerals or other afterlife expenses, there's got to be a better way. Are you ready to talk to a financial advisor about alternatives to crowdfunding your family's future? Go to www.makeitpersonalpodcast.com to learn more or to schedule a no-obligation conversation with one of our advisors. Now back to our program. So who am I? And what solutions might we offer to help you do crowdfund your future or that of your family? My name is Mark Zagurski, and I'm the Director of Strategy and Communications for Mutual of Omaha Advisors, a division of Mutual of Omaha. Mutual of Omaha has been identified as one of America's most trustworthy companies in 2025 by Newsweek. We were ranked number 3 in the insurance industry. This year's rankings include 700 companies in 23 industries ranging from aerospace and healthcare to retail and consumer goods. A company you can trust in much the same way that you may be looking for an advisor you can trust. And that is who I represent, the roughly 1,000 advisors located around the country, helping our clients to imagine, plan, and secure their financial futures each and every day. So we talked about the concept of crowdfunding dating back to the 13th century. What if I told you that the 2 ways our advisors can help you to crowdfund your future date back even further? What are those 2 ways? I submit to you life insurance and annuities. In ancient times, you find references to a sort of burial club that existed among soldiers traced back to around 600 to 100 BC in ancient Greece and Rome. These sophisticated early societies provided a form of both health and life insurance to some of their citizens. The idea was that if a soldier should be killed in a military campaign, the survivors would band together to pay for the funeral expenses. Similar evidence point to the use of annuities in ancient civilizations. In Roman times, annua, or annual stipends, were offered in exchange for a lump sum payment, ensuring a stream of income for the recipient. Now, I'll fully admit that life insurance and annuities are not crowdfunding. However, they operate on a similar principle: risk pooling and the law of large numbers. Risk pooling in insurance means sharing the financial burden of claims among a group of insured individuals. Instead of each person paying for their own losses, the premiums from many individuals are combined into a pool, which then pays out claims for a smaller number of those individuals. This practice helps make insurance more affordable and accessible. The law of large numbers enables insurers to predict losses more accurately and set premiums based on those expected losses. With a large number of insured individuals, the actual losses will tend to match the predicted losses. This principle is crucial for insurers to maintain their solvency and profitability. Life insurance and annuities are both insurance products, but they serve a different purpose. Life insurance provides a death benefit to beneficiaries, while annuities offer an income stream for the policyholder, typically for retirement. Both rely on risk pooling and the law of large numbers. The truth is, life insurance annuities are not crowdfunding. Life insurance and annuities are a contractual agreement with an insurance company. While crowdsourcing platforms can most certainly act as a lifeline for some people, it's no substitute for the security and peace of mind that comes with the right insurance policy. Furthermore, crowdfunding is not secure. With life insurance, you know with certainty that if the unexpected happens, your loved ones will be financially secure. And with annuities, you'll know with certainty that you'll have a guaranteed stream of income. The cost of life insurance and annuities, perhaps, are one of the biggest misconceptions out there. Insurance companies take on risk when issuing life insurance and annuities, and there's a price that goes along with those guarantees. My guess is if you ask the average person the cost of leveraging popular crowdfunding platforms out there to raise funds, those would be misunderstood as well. I believe it was actor and social commentator Will Rogers who said, "A man who dies without adequate life insurance should have to come back and see the mess he created." Let's not make that mistake. The truth about making disciplined financial decisions, as well as attaining your financial goals you may have, is that they can be solvable with the help of a financial advisor. There are a lot of places out there where people seek advice or guidance on personal finance. The thing about personal finance is, well, it's personal, and if you want your plan to be personal, it has to be tailored to you. It's never too late to create a plan to give you the financial security and freedom that you deserve. Take control of your future and schedule a no-obligation consultation with one of our advisors today. Go to www.makeitpersonalpodcast.com to learn more or to get connected with one of our advisors. You can also download our ebook and subscribe to our monthly newsletter. And also, please like and subscribe. Have you participated in any crowdfunding campaigns? What are your thoughts on crowdfunding? If you're watching or listening on a platform where you can comment, please do so, as I'm curious for your thoughts. At Mutual of Omaha Advisors, we understand personal finance is personal, and financial well-being is essential to achieving your life's goals. Our vision is for every customer to be able to imagine, plan, and secure their financial futures. Make it personal. It's your money, it's your plan, it's your future.
This podcast is for educational purposes only and may include references to concepts that have legal and/or tax implications. Mutual of Omaha Investor Services, Inc. does not provide tax or legal advice. Please consult with the appropriate professional regarding your personal situation prior to making any financial decisions. Strategies discussed may not be suitable for everyone. Securities and advisory services offered through Mutual of Omaha Investor Services, Inc., member FINRA SIPC. Mutual of Omaha Advisors is a division of Mutual of Omaha Insurance Company.